Alrighty, welcome everyone. Just want to verify that everything looks good. You guys can see everything. Shoot a chat if so. All right, cool. Appreciate it. All right, so let me go ahead and clear all of these drawings. So I'll just go ahead and jump right into it. All right. Firstly, I want to go ahead and start off and cover obviously what I had mentioned before. The big one, and this is kind of just going out for the people that are going to be looking back on this and haven't started trading yet. Sorry, I didn't mean to hit the mic. Haven't started trading yet. Okay. And it's looking at what bearish versus bullish is, okay, because that's a very common term, right? Bullish is whenever we're analyzing a stock, and bullish is the rise in share value, and bearish is the decline in share value, okay? And that, at the end of the day, is the bare bones definition. We see bearish, 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 okay? That's pretty much all it is, decline and incline, right? So, I want to move on to, I want to move pretty quickly because lost quite a bit of progress from my last lecture that ended up running out of time and I had to pay for it, which is all good. No worries. So I had mentioned this in my last lectures. Whenever I'm determining support and resistance, I like to kind of dumb this down a little bit and look at a more simple chart because this gives me a more simplistic idea of where the price has been and where it is. So whenever I'm looking for support and resistance, I'm doing a top-down analysis. So I'm starting from the biggest time frame, weekly, down to the furthest I go for analyzing a stock is generally 15 minutes. 5 minutes is good for entries. So I'm looking for major support and resistance levels. Support and resistance levels are levels where the stock of an or underlying security value will slow down or come to a stop. So we see here the price slowed down and bounced off of this pretty strong bounce, right? So we can pretty confidently say that this could be a good support level if the price were to come back down into this area. And determining the strength of support is by looking at how many times the price bounces off of that level, right? So I'm looking for areas where the price bounces multiple times. So we can see right here, 2 bounces. I can pretty confidently say that this is a fairly strong support. Now we're all the way up here and we're on the verge of seeing all-time highs again, which I think we actually did today. So, this support down here is not very valid up here, right? We're not going to see this big of a drop anytime soon, as far as I'm concerned, unless we have a stock market crash, which, as far as I'm concerned, isn't something to be worried about yet. Our economy is recovering from COVID lows. Stock market's been performing phenomenally. I think we're okay. I don't think that's something to be worried about. But at the end of the day, this support is not valid as of now. Price would, something absolutely outlandish in the stock market would have to happen in order for SPY to drop to this level. Okay. So I like to look at support and resistance levels as peaks and valleys. Where does the price peak and where does the price valley, right? So we see a valley here and we see a peak here. And if we go ahead and switch this back to a candlestick chart, we can actually see where the price has bounced and respected these levels, right? And so determining support and resistance, a lot of the time, no, not a lot of the time, every single time that I'm determining levels, which is the first thing I do, I always have one at all-time high because that always plays a strong support. Now, when I'm looking for support and resistance, if I'm looking at a candlestick chart, I typically don't use wicks, but you can use wicks because wicks will respect supports. And the reason I don't use wicks is because we see in this area, these wicks broke this support, but they got bought back up and held above it, right? We see right in here, they broke through it, but it didn't invalidate the support because they were able to hold above it and continued up. Okay. We see here, these wicks broke through it, but we're able to hold above this level. touches it, holds above it, breaks through it, holds above it, and holds above it, right? And then same thing with resistance. We have wicks that'll break resistances, but that doesn't necessarily mean that it invalidates the resistance. So, with that being said, one good way, and I forgot to cover this on the last lecture, so this is actually something that I need to roll into as well, is looking at volume profile. Okay, volume profile is a really great tool. Okay, really great. Webull doesn't offer it. I chart almost all the time on Webull, with the exception of coming to TradingView occasionally, specifically for lectures, because there's more tools to use and more for you guys to learn that I can help you guys understand. So I'll take a look at volume profile in a second. But one thing that I also like to note is I keep all of my indicators off. Okay. I keep Bollinger Band. I don't even use Bollinger Bands. I don't know why I have that. So I have VWAP and multiple EMA, and my Webull chart has multiple EMAs, but they don't look like this. But this is the closest thing I could get. I keep these off so that it keeps my charts very simple, just down to candlesticks. I will look at these for levels. These generally are good key levels to look for. They typically play a role in support or resistance, depending on where the price is. As we can see, SPY has just been above it, above these EMAs for quite a while. So they probably won't play a resistance, rather a good support. So let me go ahead and turn these off. We'll get into those in a second. But after determining my major levels of support and resistance, I determine the validity or the strength of those by how many times price bounces and respects those levels. We see right here, 1, 2, 3, 4 bodies essentially respect this support. So I can pretty confidently say this is a strong support here. If I wanted to go long, I'd probably look for confirmation that this price action is going to respect the support. Sorry. Whenever I see that price is going to show some strength and hold above this support, I'd probably go long, and vice versa with resistance. If I see that price is going to respect this resistance and essentially pull back or reverse, I might go short. That's a very broad side, and there's definitely some more in-depth material for that, and I'm going to get into that a little bit in a minute. But essentially, if you can determine these levels, you can, at the end of the day, trade, right? If you were able to identify this pattern right here that was forming, and you see that it respected the support and bounced off of it, you could probably go long, and it would pay pretty nicely. Now, then again, we are looking at a weekly time frame, so this is generally not something that I would look at unless I'm looking to swing. If I'm looking to swing, I'm staying on really big time frames, hourlies, 4 hours, days, and weeks. I'm looking on really big time frames. Anything lower for swings, and I don't really recommend it unless you're going for day trades or scalps. So we see here, after determining these levels, I'm going to go and do what's called top-down analysis. So I go from the weekly down, no further than the 15-minute. And typically I don't determine levels on the 15-minute, but 15-minute and 5-minute are good for entries. So we see here on the daily, I'm going to also be looking for further levels within these major levels. I like to call them major because they're on a bigger time frame, right? So I'm going to be looking for some key levels further than these where the price could respect. And if I don't see any particular levels that are further than the major ones, then I'm going to go down to maybe an even more slimmed down time frame. And, we start to see a lot less information in these candlesticks. It's a lot more spread out. We start to see a lot more noise. But what we can do is we can look at some of these areas that are a little bit tighter on a bigger time frame and see that we do have getting some notifications. Sorry about that. Let me close out of Discord. Sorry. Okay. So whenever we get down to these smaller time frames, we can generally identify support and resistance levels where the price will respect on a shorter period of time. So we have this consolidation low right here. Now, if price rejects this, we can probably see it come down to here. and bounce off of this. And this is just hypothetically. This is by no means my analysis, but hypothetically, price rejects this, comes down. We can probably see it bounce off of this in this consolidation zone, right? We have this bit of support right here that price could respect. And, you know, I will say you can go to the more simple time frame and still see some areas that you can identify with here, but there starts to get to be a lot more noise, and it starts to get a little bit harder to look at these levels. Though it does simple it down. Definitely not my favorite after a certain period of certain time period to actually analyze and look for levels with the line chart, I should say. Candles, I'll go back to candles after about the 4 hour and then go down to 1 hour, look for any further key levels, right? And generally, whenever I'm looking for key levels on a play that I like, I'm actually going to get even more narrow. I'm going to come down to a closer period of time. I'm going to be looking for lows here, highs here. You know, we can confidently say that this could be a support here on the daily low. And this could be a resistance right in this area. Well, really, we do have a resistance right here in this all-time high. But more narrow time frames, I'm going to be looking for more narrow supports. And actually, if we look back, we can actually see that this is a pretty respected zone right here. This little blue middle line, respect all the way through. Pretty confidently, you can say that this might be a strong support if we see price pull back to this. And same thing goes for resistance. Okay, we have the all-time high resistance, and it always plays a strong resistance. Top, breakout, comes back down, top. Pretty strong resistance. You know, price struggled to break out here, got bought up, and then came back in, right? We do see a lot of crazy price action right in here. Been some crazy volatile days with SPY. So, you know, with that being said, whenever I'm determining levels, I'm doing top-down analysis. And that's always the first thing I do. And then the next thing I do is identify the trends. I identify if it's an uptrend or a downtrend. And what I like to do is you can draw channels or you can draw one trend line, but a lot of the time I like to suggest that you do channels because you can look for upper and lower trend line support and resistance. Ooh, sorry about that. Voice crack. As we see here, we have this upper trend line resistance and we have this lower trend line support. Let me slow myself down before I. And whenever this trend line gets broken, it'll retrace. And a lot of the time, this previous support will be a resistance. And that's pretty much the rule of thumb with support and resistance. If a resistance gets broken, a lot of the time it'll become a new support. And when support gets broken, a lot of the time it'll become a new resistance. And that's really the key. That's the rule of thumb with support and resistance levels. Is a lot of the time, whenever those levels get broken, they typically will be seen as a support or a new support or resistance level, right? Welcome, Peter. Welcome. Thank you for joining in. So we're looking at these levels, right? We're identifying the trends. And so the next thing that I want to talk about is volume profile. Okay. Or no. Actually, before we do that, I also want to identify like consolidation periods. We see here on Ford on a daily time frame, we have a lot of inside trading, right? A lot of consolidation right in here. Okay. This is, you'll hear this be referred to as sideways trading a lot because there's no upward or downward direction here. You know, if we had upward direction, we'd be going this way. And if we had downward direction, we'd be going this way. Okay. There's no direction. It is sideways. It is purely just going straight down the middle, horizontal. Okay. There's no clear direction. So you'll hear it be referred to as sideways, inside, or consolidation. All of those have the same meaning. Sideways means consolidation. Consolidation means inside, and so on and so forth. Okay. Consolidation price is staying tightly between two levels of support and resistance, just like we're seeing here, very tightly. We're looking at on Ford, actually, this actually seems to be flagging a little bit. It's not my favorite flag just because of how this weird choppy price action, but it is a bit of a flag. Not my favorite flag, like I mentioned, but this candlestick seems to be showing some strength here. The only problem is if you come down to the daily, there's just all of this weird price action. Ford doesn't know what it wants to do. Um, so, consolidation, and a lot of the time we'll see this bull flag could get rejected. And reason being is because we have this bull push and prices consolidating, and we could see a break below. Now, I don't think it'll be a major break below, but in Ford's case, I think that we could see it fail to break on this bull flag and kind of retrace below this. Just because this bull flag, is so elongated, it really could be easy for it to just get invalidated. But with that being said, exactly. See, thank you. Precisely. That is exactly it. A lot of the times, Peter has a good point. A lot of the times, after a strong run up, a bull flag could get rejected. And I don't like playing major bull flags like this because runs up, consolidates, and we could see a break below. So generally, I stay cautious with big consolidation periods because a lot of the time it's because price can't determine where it wants to go, and more often than not, we'll see it reverse. So coming back to SPY, I love trading SPY because it's one of my personal favorite, and I mentioned this in the last lecture, but ran short of time. It's just because if you can have sound analysis and you can determine your levels, SPY can play out and pay pretty well. We see with our analyst iSpy that he scalps SPY and makes 100% gains on these scalps that he makes, and it's because his levels are strong and he's got good analysis. And that's the thing with SPY is you can almost print money trading nothing but SPY on the upside and downside just for short-term gain. So, we'll go ahead and do a recap. We've covered determining levels, and sorry, tripping over my words here. We've discussed determining levels and determining trends, uptrends or downtrends. The bare bone definition of an uptrend is prices increasing in value, and the bare bones definition of downtrend is prices decreasing in value. So we see here, this is a bit of a downtrend. We see there's a bit of an uptrend. This is a bit of a reversal, you could say, from a downtrend. So with that being said, I am on to my next point, which is volume. Okay. You'll hear people refer to you'll hear there's not enough volume a lot, right? And a lot of the time, whenever we're looking at volume, we're looking at this, and you'll see at the top left, or depending on your brokerage, the top left, you'll see that there's available volume that's being traded. Okay. And whenever we're analyzing this type of volume, we're looking at the volume that's been traded on a specific time. Okay. So today, this is the amount of volume that's being traded. So yeah, like I said, this is the amount of volume that's been traded within a specific time period. Yes. Like Peter said, if you can determine market structure of SPY, you'll be able to determine market movement from the main stocks of the S&P 500. Precisely because SPY is a index fund, so it is essentially invested in 500 companies, or another. Yeah, that's pretty much the simple way of putting it. So whenever you're looking at SPY, you're actually looking at an index fund that essentially is overall 500 companies. So you'll see a lot of big market cap stocks like Apple, which can control the market because of how big they are. They play a lot of influence. Yes. Definitely. Alrighty. So, with that being said, we've determined all of these levels. Then we're also looking at volume. And there's sometimes whenever we say that there's not a lot of volume, that means that there's probably not a lot of buyers, or there's not enough volume for the buyers to take up. Buyers aren't there. You'll see, we can analyze the volume, and we can see that it's slowly dropping down. I don't know why I have this open. We can see that volume is slowly dying down, which means that buyers could be slowing down in this level. You can generally determine how strong buyers are based on the body of the candlestick, right? The bodies of candlesticks can tell you a lot. So, analyzing volume is a big thing whenever determining the strength of buyers or sellers. We have a strong red candlestick here, and or strong red volume here. We can see strong red, strong red. Same thing goes for here, strong red, right? So, analyzing volume has a lot to do with especially how I enter my trades. By analyzing volume, I can determine the strength and determine if buyers are there or not. So, looking at volume and looking at price action are key, right? With that being said, let me see here. Sorry. With that being said, volume plays a key role, and I like to preach to keep trading simple. I like to preach that you just need to be able to determine levels and look at volume, because at the end of the day, a lot of these fancy shiny indicators are going to essentially be just the same. It's just the same. At the end of the day, these indicators are the bare bones of volume analytics and price action. RSI is price action. RSI is, I don't know what it actually is, but I do know that it's essentially, it determines if the value of current price action is oversold or overbought. Indicators like that, I don't typically tend to use those because a lot of the time determining a play can be as simple as just looking at buyers and looking at price action. Now, with that being said, I also want to talk about volume profile. Volume profile can play a really, really good role in determining the validity of some of your levels. Okay, so let me go ahead and turn this on. Volume profile is not available on Webull, but it is available for TradingView, and I actually don't use volume profile as much as I used to, but I do think that this is a really good way to determine zones, support and resistance zones. And so, whenever we're looking for these zones, support and resistance zones, we're looking for these shelves right here. We have these gaps and we have these shelves. Let me go ahead and visualize this, because we need to understand what they are, right? So we have this gap here. Oops. We have this gap right in here, and we have the shelf right in here, right? And a lot of the time, these shelves are the areas where the price will respect, okay? And these gaps are the areas where price will quickly move through, okay? We're on a fairly large time frame, but we see right here, there is this good shelf right here, this good zone. And then there's a bit of a gap until the next shelf. There's a bit of a big gap right here until the next shelf. And price moved pretty quickly through it. We have a gap up. Then we have this slowdown. We're even seeing it right here on volume, on the time frame volume, that price action is slowing down in this shelf. Okay. And what volume profile is it's displaying the total volume of an underlying security at specific levels. Okay. This shows us time at specific time, and this shows us at specific levels, areas where there's a lot of volume at that price. Okay. So we see there's a lot of volume at this price. There's a lot of volume at this price, right? And you can determine the strength of your support and resistance levels by these zones, because a lot of the time where there's a lot of volume, we'll find support and find resistance. Okay. So as we can see here, we can actually see that these levels that I had already determined are actually pretty valid when we're referring to these zones. Right above this before a gap, and right above this before a gap. Same thing here, right above this level. Okay. A lot of the time I can determine if these levels that I've drawn are going to be strong or not. So, volume profile is a really great way. It's also a really great way to determine the strength of support and resistance levels. Now, it's also a great way to determine supply and demand levels. Now, at the end of the day, though, you don't necessarily need to use volume profile, but it is a great way to determine good levels and good areas to play off of. So if you're looking at a stock that's in kind of a gap zone, I'd like to call that middle of nowhere. If price is trading in that middle of nowhere zone, I typically won't trade it because there's not a lot of volume. So buyers or sellers are really not. It's either up or down, and if it's in the middle of nowhere, it's kind of hard to make a good play. Whereas if there's a good shelf and I'm looking to go long on a support, well, if it's in a good shelf, then I can pretty confidently say that there might be some good buyers might be able to step in soon. Now that is a more broad idea, but I also take into account looking for what the volume looks like. See, just like I said, we see that here on the daily, price looks to be a bit exhausted. Now buyers are looking pretty strong still, but buyer volume is slowing down a bit. Now, volume profile, like I said, is a really good indicator of support and resistance levels. It can determine the strength and validity of those levels very well. Just to go ahead and visualize this one more time before I move on, we see here volume shelf respected, resistance, volume shelf, support, volume shelf. Okay. It's a really great way to determine levels, determine supply and demand levels. Great way. Okay. Now at the end of the day, like I had mentioned, I don't use volume shelf as much as I used to. And main reason being is because whenever I'm analyzing a stock, I can pretty easily identify tight levels that a lot of volume has come into. Now, with that being out of the way, volume profile, trends, support lines, these are all things that I like to look at whenever I'm looking at plays. Okay. I like to play breakout plays, and I like to always preach to keep it simple. I mentioned this earlier. The next thing that I want to cover is kind of briefly going over candlesticks. Okay. There are candlestick patterns, and candlestick patterns, just like overall chart patterns, can give us insight as to where the price could go. So, whenever we're looking at candlestick anatomy, right, we can probably, let's stay on a daily time frame, kind of keep things a little simple. Whenever we're looking at candlestick anatomy, essentially what we're looking at is wicks and bodies, essentially. You have this wick, you have these upper and lower wicks, and you have these bodies. And whenever we're looking at these wicks, what we're looking at is upper and lower extremes of price. That's what I like to call it. And that sounds a little bit harsh, but what I mean by that is essentially this green candlestick opened down here. Or no, sorry. It opened up here. Don't let me confuse you. This candlestick opened right here. Sellers tried to step in and bring it down here. Buyers brought it back up. Buyers tried to bring it up here. Sellers brought it back down. Okay. We have what I like to call a bit of an indecisive candle because these wicks look fairly even. Okay. Sellers are stepped in right here and buyers are stepped in right here. So it's a pretty even battle, though we have a good strong body. So we can pretty confidently say that these buyers are probably going to outweigh sellers. Okay. Now we do have the strong red candlestick prior, which would make me nervous about this candlestick if I was going to play long, of course. But we do see this decent medium body right here, which suggests that buyers have more control than sellers, of course. And whenever we're looking at a red candlestick, we're seeing price open and price close. Okay. This is where the price opened and this is where it closed. Buyers tried to bring it up here. Sellers didn't let them. And then sellers tried to bring it down here and buyers didn't let them. We see that buyers bought it up pretty well, respected the support here. Okay. So sellers tried to bring it all the way down here, but buyers stepped in and took it up. Buyers tried to take it up here, and sellers stepped in and took it down, right? And vice versa for green candlesticks, okay? And, there's a plethora of candlestick patterns and names for candlesticks. The most basic ones that I want people to know is a hammer and candlestick hammers, depending on which direction, are good indicators of reversals and upside or downside. Okay. There's a plethora of candlestick patterns that you can analyze, but at the end of the day, I would so much rather prefer to understand the anatomy of the candle rather than a pattern. And the reason being is because if you understand the anatomy and how these candles work and how they look and why they look the way they do, then you'll understand what's going on in price action, right? So we see buyers tried to bring the price up here, but sellers beat it down and got it down here. So we can understand that sellers are in control here. Okay, we can understand that sellers are in control here. Buyers took control, tried to bring it up here, but sellers beat it down a little bit. Okay, so if you understand what these wicks mean and what the bodies mean in the anatomy, I think that's your best bet to understanding the direction of price action. Because if we see that sellers try to bring the price down here and then buyers are able to bring it back up past open and all the way up here, we can pretty confidently say buyers have control, right? And that's generally what I'm looking for if I'm looking to go long. I'm looking for buyers to be in control. And if I'm looking to go short, I'm looking for sellers to be in control. I want it to move in my favor. I want to have the highest probability of it moving in my favor. So I'm going to look for sellers if I'm going to go short and buyers if I'm going to go long, right? So I'm looking for wicks, green wicks that have a lot, like buyers are showing strength, okay? I want to see strength. And I determine strength by volume, price action, and my levels. That's how simple I keep my trading. I play off of levels and volume. Okay. And that's what I try to preach is you've got to keep it simple, right? And so, we can look at all these things, we can have all these indicators, and at the end of the day, it's pretty much impossible to be able to hit a trade 100% of the time. No matter how good your analysis is, we can hit profitable trades and we can have things like 80% win rates, maybe more, maybe less, whatever the case may be. But at the end of the day, there's no amount of analysis that can give you 100% win rate. You'd have to, I don't even know what you'd have to do to get me to believe that an analyst has 100% win rate. Now, with that being said, though, that's off topic. The main goal today is to talk about these levels, a little bit of technical analysis, a little bit brief because I got cut short on another lecture. So this is a lecture to make up for that. So now that we've covered a little bit of candlestick anatomy, I will want to cover this a lot more in depth later, but more briefly, we're looking for wicks and bodies to determine strength of candlesticks and what direction they're going. Now, developing a trading plan. Okay. This is one of the big things that I want to cover. Whenever you're developing a trading plan, it's all about planning your trade and trading your plan. And what does this mean? Well, let me explain, right? A disciplined trader in my dictionary, a disciplined trader, keyword disciplined, is a successful trader. Okay. A trader who can master their emotions can and will be an unstoppable trader. Whenever you're able to master your emotions and have a disciplined trading plan, you will be a successful trader. If you are resilient and you can stick to this trading plan, like I said, and stay disciplined, then you will be on the right path to being a successful trader. Traders that make hundreds of dollars and are trigger happy and somehow get lucky on trades, they're not a successful trader. If they don't have their emotions down, if they don't have their trading plans down, how are they going to be better than the trader who has practiced one kick 10,000 times. That's how I like to look at it. That's a quote from Bruce Lee. One trader who practices one kick 10,000 times will be the best trader. Okay. So if you stick to one trade plan and you constantly tweak it and you constantly are refining it to make it better so that you can maximize profit, you will be a successful trader. Okay. The way that how I like to look at developing a trading plan is very simple. Like I said, I keep my trading very simple. Is my trading philosophy is if price does this, do this. Okay. And what I mean by that is if price action is going in my favor, do this. Okay. And it's XYZ, right? There's multiple things that I'm going to have in line. Okay. If price does this, do this, right? That's how I develop my trading plan. Now, that's very simple. And at the end of the day, trading plans are very subjective. But what I mean by that is if price breaks support and holds below support, I'll go short. Price breaks above resistance and holds above resistance, I'll go long. If price does this, do this. Okay. Now, whenever I'm looking to take a trade, a few things that I like to look for, like I just mentioned, is price to break above or below my levels. Now, it's further than that. Okay. So let me further elaborate, right? Say I'm looking for SPY and I generally have some more levels that I've got determined. But say I'm looking to go long on SPY, right? Maybe my entry is this level right here. Okay. Maybe I decide that a break above 466.82 and I'll go long. Okay. Now, obviously, this is not the best entry because we don't get much gain out of this. But at the end of the day, profit is profit, right? But that's besides the point. Okay. Say my trading plan. If price breaks above this, buy in, set my stops below entries, not below entries, sorry, below support, and have a set price target in mind as to when I want to trim or take profit. Okay. Now, these are a lot more broad levels that we're looking at, but say hypothetically, SPY breaks above this level, I go long, price hits my price target right here, I'll trim or take profit. And generally, if I'm going to trim, I'm looking for it to break above and go for the next leg up. Okay. Now, whenever that happens, and if it does happen, okay, whenever my entry goes in profits, I move my stop loss to my entries. And reason being is because I want to take risk off the table. So if my stops are at my entries, I'm not giving anything back. The only thing I lose is tradable capital. Okay. We want tradable capital, which is key, especially with cash accounts. But stops at entries keeps risk off the table. You won't give profits back. Okay. I cannot stress this enough with newer traders is they struggle to have stops losses and they struggle to have downside protection, which also goes along the lines of hedging, which will be another topic that's coming up. So determining these levels, I develop a trading plan based on these levels. If price breaks my level, I'm going to go long or short, depending on the momentum and direction. And I determine the valid strength based on volume. Okay. We see good, strong buyers in here, all the way down here on this volume area. Let me see if I can get a better volume pulled up for you. Sorry about that. Let's see here. Okay. Well, that didn't work, but we see that buyers are showing a lot of strength right here. Okay. So a lot of the time, my confirmation is a break above a level with buyers showing strength, because if buyers are showing a lot of strength, that means that we could see some more upside. Okay. So a break above a certain level with buyers, with confirmation of buyers stepping in or confirmation of sellers stepping in, depending on if I want to go long or short. Okay. So, like I said, maybe let's narrow it down and say I have a key level here, right here, almost perfectly right. We'll say it's hypothetically right here. Okay. Just on a hypothetical sense, a break above this and a hold above this level. I'll go long. Now, I won't go long unless buyers are still showing strength. Okay. They showed strength here, here, and here. Okay. 1, 2, 3. So I get in. Buyers are showing a lot of strength. Upside is foreseeable. I might trim at this level and I might hold. Once I'm in profits, my stop loss is adjusted to my entry so that there's no risk on the table. And essentially, that is how I like to essentially develop my trading plan is if price goes above or below a level, I'll do this. And there's a lot more in-depth material to that. But that can be covered on another note, because a lot of the time I also like to play breakouts. Okay. And whenever I'm looking for a breakout play, if I'm looking for a breakout play to go long, I'm looking for sellers to be decreasing. I'm looking for sellers to start getting exhausted, because then I can assume that buyers will want to step in at some point. Now that can be invalidated and sellers can decide to jump in again and bring their selling volume up. But a lot of the time, if we have a pattern that's signaling a breakout play, sellers are decreasing, we can look for buyers to step in at some point and give us the next leg up. Okay. So, whenever we're finding high probability levels, analyst I Spy covered this really well. You want to determine your levels and you want to determine the strength of those levels. Okay. And by determining the strength of those levels, you're looking for how many times the price respects those levels. And if it respects it multiple times, you can say that it's a strong level. A break above or below can determine if you go long or short. And a lot of people ask, how do they maximize profits? Okay. Well, the thing with trading is you have to look at it like you're going to lose. Okay. Now, maximizing profits is nice, but at the end of the day, you don't want to be greedy. Maximizing your entries, that's good. At the end of the day, maximizing entries is solely dependent on levels. Okay. Now, a lot of traders will like to preach that there's candlestick patterns that you can play for 100% win rate and 100% profits every time and things like that. But the best way that I like to look at it is levels. If you can determine levels, you can be a trader, because levels are everything. They really are. At the end of the day, levels and patterns. If you can determine levels, patterns, and essentially overall trends, you will be a phenomenal trader. It's just about practicing and being disciplined and never stopping, never breaking discipline, right? And I think that about covers it for this lecture. I was a bit brief, and there will be more lectures to come, and they'll be more in depth. But I think that this is a really good one. I really wanted to get this material out there for people who want to know how to essentially start developing trading plans and when to maximize entries. My best advice to developing or for entries, if you already have a good trade plan, stick to it. My best advice for entries is determining levels and playing those levels, right? You see a break above a level, play it, go long. You see a break below a level, play it and go short. Just remember your risk management, your risk tolerance, your downside tolerance, and those things, which will all be covered more in depth and in other lectures later on. Now, I hope everyone got something and took something away from this lecture today. I will be covering these again, like I said, and more in depth, of course. So yeah, I hope you guys took something away from this, and catch you all in the next one.